Views regarding the economy, securities markets, or other specialized areas, like all predictors of future events, cannot be guaranteed to be accurate and may result in economic loss to the investor. Past performance is no guarantee of future performance. Any information is for illustrative purposes only and is not intended to serve as investment advice or as a recommendation, since the availability and effectiveness of any strategy is dependent upon your individual facts and circumstances. Individual securities discussed may be held in accounts where JGUA and or its employees have a beneficial interest. And with that, let's get to this week's episode.
Hey everybody, Dr. B here with John G. Ullman and Associates. This is our weekly market update for the week of June 30th. This also happens to be the week of 4th of July, so I want to take a minute before we get started to wish everybody a happy 4th of July. If you're new and joining us for the first time, thanks for joining. Hopefully you'll find the video helpful. And if you're a returning guest, remember you can always throw questions in the comments. Also, if you enjoy the video and find it helpful, make sure to like and subscribe to the channel. So with that said, my purpose in creating these videos is to use my background in economics to help you better understand the economy and the financial markets so you can make informed financial decisions. And with that, let's get ready to hit the books and get up to speed on the markets. So like always, let's start by taking a look back at last week. Last week, we saw some very interesting economic data, but I want to start with the consumer side of the economy. So we saw the Consumer Confidence Report from the Conference Board. We also saw the Consumer Sentiment Report out of the University of Michigan. These are two different surveys that essentially are asking questions related to how the consumers feel about the current economy and what their expectations are for the future. The Consumer Confidence Report came out earlier in the week, and unfortunately, we saw it unexpectedly fall. Both consumers' current view of the economy and expectations for the future ended up worse in June than it was in May. The Consumer Sentiment Report came out later in the week, and in this report, we actually saw some slight improvement. In fact, the Consumer Sentiment Report for June was the first increase in consumers' attitudes in the last 6 months. Now, unfortunately, consumers are still pretty worried about the future, specifically inflation and tariffs. But what we saw was that in the consumer sentiment surveys, we saw consumers move from panic to concern, ultimately paying attention to what's going on, but not necessarily panicking about what could happen. We also saw the last update or revision to the estimate of the first quarter 2025 gross domestic product. So remember, GDP is measuring the size of the economy. And in the first quarter, we saw the economy shrink by 0.2%. This revision changed that number down. So the economy actually shrank by 0.5%. The result or the causes of this downgrade was in large part due to a downward estimate or revision to consumer spending and a downward revision to the amount of exports sold to the rest of the world. In addition to GDP, we also saw some data on personal consumption and expenditures, sometimes referred to as the PCE report. In the month of May, we saw personal income fall unexpectedly. We saw personal expenditure also fall unexpectedly. And we saw the inflation coming from the Personal Consumption Expenditure Price Index rise slightly more than analysts had expected. Ultimately, the headline PCE inflation number increased by 0.1% in the last month and 2.3% in the last year, which was a little bit more than the 2.1% we'd seen last month. The core value for PCE inflation actually increased 0.2% in the last month, and over the last year, it increased 2.7%, which also was an increase from 2.5% last month. Last but not least, looking at the big three of GDP, inflation, and unemployment, we saw unemployment insurance claims, at least the continuing claims, increase by a significant amount last week, while we saw the initial claims fall slightly over the last week. Ultimately, what we're seeing in the job market is just more evidence of what we've already referred to as the low hire, low fire economy, where essentially folks aren't losing their jobs at a high rate, but the folks that have lost their jobs are having a difficult time finding new jobs. Last week, we also saw some interesting data coming out of the manufacturing and trade sectors. So coming out of manufacturing, we saw a report on durable goods manufacturing. And in fact, unexpectedly, we saw durable goods manufacturing increase by 16% in the month of May, which was massive. When we looked a little deeper into the data, what we noticed was that durable goods manufacturing in the transportation industry actually increased by about 48%. And if we looked at the durable goods overall and excluded the transportation sector, durable goods as a whole only increased by about 0.5%, so about half of 1%. We do see durable goods manufacturing increasing across the board, which is positive, but the majority of the surprising positivity in this report was centered in the airline and transportation sector. Switching over to trade, we saw the trade deficit in goods for the month of May increase by about 11%. Unfortunately, this increase in the deficit was a result of two things happening simultaneously. One, we saw an increase in imports in the month of May, and two, we saw a decrease in exports for the same time period. Unfortunately, as far as economic growth and success, what we'd like to actually see is the opposite. It would be great to see increases in exports and a reduction in imports, but that's not what this report brought to us. Taking a look at the housing sector, we, again, as with so many areas, saw mixed results. So in the month of May, we saw new home sales drop by approximately 11%. We saw existing home sales increase by about 1%, and we saw pending home sales, meaning home sales that are in process, increase by about 2%. The drop in new home sales is concerning, but what is additionally concerning is that 4 out of the last 5 months, we saw increases in the number of pending home sales that were canceled prematurely, the majority of which were for financial or economic reasons. Ultimately, what we're seeing in the housing market right now is a growing supply of houses coming on the market, but a massive shortage in demand for those houses, in large part as a result of high interest rates and an ongoing affordability crisis in many states. Taking a look at stocks, it was actually a pretty good week for stocks as all 3 major indices produced gains for the week, and all 3 major indices either established new record highs or ended the week within striking distance of their record highs. Some analysts have started to refer to this as a full-on momentum market. Ultimately, the idea being that the market is continuing to push forwards and push up regardless of what sort of moderate or even bad news may be released. The market has the momentum and it continues to push on. Now, in these full momentum markets, in the past, we've seen the market grow pretty incredibly and pretty rapidly, but we've also seen the momentum continue for several months. So as we move forwards, we can refer to Newton's first law of motion, sometimes known as the law of inertia. Ultimately, an object in motion will tend to continue to stay in motion. The stock market seems to be moving with inertia and momentum in an upward direction, but only time will tell how long this will continue. Swinging over to the fixed income side of the house, the yield on the 10-year Treasury note dropped throughout most of the week, although we did see a slight recovery on Friday, ultimately with yields on the 10-year Treasury ending about 4.3%. We also saw Bitcoin post a pretty positive week. Early on, there were some big gains, and then throughout the rest of the week, Bitcoin tend to hover right around $107,000. In other news, we saw the value of the dollar continue to fall this week, ultimately reaching its lowest point since late 2022. We also saw the price of crude oil drop pretty dramatically early in the week, in large part as we saw the ceasefire between Israel and Iran continue to maintain and stay in place throughout the majority of the week. We also saw that following Israel's attack on Iran, very little damage was actually done to energy infrastructure, and the much feared Strait of Hormuz stayed open and was not necessarily significantly impacted by the conflict. All of this ultimately leading the price of oil back to essentially where it started prior to Israel's attack. Last of all, we'll take a minute to look at gold. As I've mentioned before, gold is typically viewed as a safe haven, the most traditional safe haven in the investment world. Gold throughout this week actually lost a little over 2% of its value. Ultimately, what we're seeing is investors looking for a safe haven throughout this last week shifted their focus back to government treasuries. We're also seeing that as the volatility in the markets, as indicated by the VIX volatility index, has returned to a much more normal and stable level. Following the disruptions in April, where the VIX was hitting record highs, we've seen it fall to a much more normal range for the last month and a half. Ultimately, investors seem to be looking in other places for their safe haven and seem to be looking back to the stock market for investment opportunities. And the price of gold has seen a slowdown in the inflow of funds into both gold as a commodity and gold-related funds. On that note, we'll turn our attention to this week, the upcoming reports and economic data. This week is actually going to be a jobs week. As we move out of the month of June, what we'll see later in the week is we'll see the ADP private employment report. We'll see the job openings and labor turnover survey. And towards the end of the week on Thursday, due to the 4th of July holiday on Friday, we'll see the national unemployment report as far as jobs and employment levels. Also this week, we'll see some fascinating economic data. Specifically, we'll see data on construction spending and new factory orders, looking on the supply side of the economy. We'll see the survey results from the Institute for Supply Management, or ISM, both on manufacturing and services. And we'll actually see the full trade balance report to include both goods and services, in addition to the goods report that we saw last week. Thinking ahead to the future. At this point, I think it's undeniable that the stock market and investors are in an optimistic mood, looking for the good news amidst any concern or bad news. It may be that investors and institutions have just gotten tired of being worried about uncertainty, and they're ready to take action in the meantime. But ultimately, what it means is we're seeing a full momentum move in the stock market and moving upwards. Despite the fact that there are still big uncertainties around tariffs, around tax policy, around the big beautiful bill, around trade, around geopolitics, and around several other issues domestically and internationally. Ultimately, all we can say is that from this point forwards, we're just going to have to keep our eyes open, pay attention to the new information and the new data. Hopefully, the enthusiasm and optimism is well-founded and will continue. But with that said, if concerns and issues do arise, you'll hear it first here on the weekly market update. As always, we do our best to go out and read all the economic reports, look through the data, and bring you the most important information in an easy to understand format so that you can make informed decisions. We do our best to take our time and expertise to help keep you up to speed on the markets. With that said, I want to thank you for joining us this week. Don't forget to like and subscribe to the video and the channel, and come back and join us again next week for the updated information and hopefully more good news.
Thanks for watching. If you found this video helpful, give it a thumbs up and hit that subscribe button so you don't miss future updates. Looking for more insights like this? Head over to our website at jgua.com for additional resources. And if you'd like to talk about your personal financial goals, we'd love to help. Just click the Schedule a Meeting button highlighted on your screen to book your complimentary consultation. Thanks again for joining us. We'll see you in the next video.